Good evening, everyone. I hope you're all doing great. Okay, so happy New Year first of all. Before I start anything, nice to have everyone on my page. So, as I promised in the previous year, I said that I've been dropping many content regarding the synthetic market and the currency market majorly this year, and we've resumed. Hopefully, maybe I'll be dropping it just once in a week. So, as God will be helping me. So I welcome everybody. If you are encountering this page for the first time, I welcome you and I appreciate you. Do it to like and follow us. Okay, so tonight tonight I'll be talking about the step index market generally. So we'll be looking at just want to do a random analysis on step index, the synthetic indices. So now for example, when I want to approach this chart, the first thing I do is that I ask, do we have a liquidity graph? That is my first question. So if you have a liquidity graph, then I have an idea of what to do. So now when we look at this step index from the daily time frame, we can find out that we have a liquidity graph already, which is this. So the market took out the sell side liquidity. What do I mean by the sell side liquidity? Maybe that is where the sell order is resting below. Yeah. Some people wanted to buy early. It's looking as if that they actually want to trap the early buyers. Yeah, let me use it that way. It's just like, for example, no move actually happened in isolation. Rather, it needed an environment or it needed context. So, for example, if you look at this movement generally, you will find out that we have a break of market structure. This I, let me mark it. We have a break of market structure, and we've always said this that when the market structure is broken, it indicates that we are buying. Yeah, when the market structure has been broken, I mean, it shows that there's a change in the trend. It's either if the market is going up and you suddenly have the market breaking the low, it shows that we are selling. If it breaks the high, it shows that we are buying. Though it is not limited to that, there are contexts to it. So now let's look at step index daily time frame. Now, the first thing is that I would love to introduce the concept of internal and external range liquidity, but I feel let's just work with what we have first. So first of all, we have a break of market structure here, a break of market structure here. We have we have a liquidity resting below this range. And if you notice, the market has taken out this liquidity. What does that mean? It simply means that whenever the market does not move in isolation, it needed the liquidity. So this engineered the liquidity. And where's our drawn on liquidity? This is our drawn on liquidity, which means that this is where the price is heading to. This range. Yes, that is where the price is heading to. That is where the price is heading to. Now, when you look at it, I have this I have this low which projected is high. The high broke the structure. I have this liquidity, this engineer liquidity, I have it. Then the market grab it out. Like it took out the sell side liquidity. And when the sell side liquidity is taken out, we expect the market to gravitate towards the upside. Do you understand? So we already have a bullish bias on step index. Actually, I picked this trade with a very slow size yesterday and I was profitable. I made the money. Hopefully, I share the screenshots alongside when I post this. So let's check our 4 hours. Okay, this is it. This is our 4 hours time frame. Now it becomes more clearer. What do I mean? This is the low. Now, one thing is that to have a kind of A plus setup, though I feel it's not really needed, but let me just say it. So to have a plus setup, the first thing you should ask yourself is that, do we have the old low or the old high being rated? What do I mean? This is it. You can see it. It has been rated. You can see it. It has been rated. So if it has been rated and it breaks above the high, it shows that this side, the selling in this end is not useful again. So we are not selling at all, but rather we are buying. So we have a break of structure. This is a 4 hours time frame. We have a break of structure. And now, if you notice very well, some people will tend to just buy here. And actually, nothing is wrong in buying here. Nothing is wrong, absolutely. Nothing is wrong. But the point is that the market needs to take a liquidity. Now, I wish to explain why this thing happened. So let me try to explain something here. Now, if you pay attention to this move here, you'll find out that before the move started, let's go back to daily to see it properly, to see what I'm trying to explain. Okay, now this is it. If you notice here, we have this low, we have this low. There was a gap on a daily time frame. There's a gap on a daily time frame. It started here. There was a gap. There was a gap here. So we had a structure. We had a structure like a shift. We have a structure. Market came back to touch the other block. Market touched the other block. We have another one. Excuse me. We have another one here. We have another structure here. Market came back to retest the other block. Are you with me? So now, when you look at this end, there was a break of structure, and there was a retracement for another buy. Here is another structure. This is it. Here's another structure shift. Here another structure shift. Let me make it. Let me make so we can. So now we have another structure shift here, and in which the market came back to come and retest. It came down to come and replace. You can see it. The market came back. It retested. So from the order flow perspective, we can see that this thing is actually going to the upside. So it is not selling. Now it will be so funny to try to sell in this kind of move. It is incorrect. But now let's try and look into it more. You find out that we're trying to work within the range of this movement. We're trying to work within this range. Now the first thing is that we don't have a fair value gap here. I don't call this a fair value gap. This is not a fair value gap. So there was a break of structure here, and if you pay attention very well, there was a the price was induced here. You can see it. It was induced, and we had a retracement into this point. We had a retracement into this point. You can see the retracement into this point. We had it. So when we had it, so we expected the market, after it has taken the sell side, we expect the market to come to the upside. So it simply means that if you go to lower time frame, one of the things that I'm very sure and certain of is that we will see something that look like this pattern again, like trying to replicate itself again. So let's just jump to 1 hour. So for example, if you are analyzing from a daily perspective, I feel like the close, or should I say intermediate level or intermediate level time frame you should be your 1 hour time frame. So let's jump to our 1 hour time frame. So on our 1 hour time frame, I'm going to show us some things regarding it, and let's see how it goes. So we already know that this was where the price induced. Yes, this was the range. Let me try and look for it very well, because I don't know what is clearing it away. Okay, yeah. So it was this end the market induced, and we had our bullish movement. Now we had a shift, we had a shift, we had a shift, we had a shift here, we had a shift. So we had a shift here, and this was the shift. So we had a shift which goes to the upside. Now pay attention to something. You will find out that we had a sell side here. We had a sell side that was grabbed. Again, a sell side was grabbed. Sometimes these things it can be so hard to figure out, but actually that it is what it is. So we had this grab, and if you pay attention, this thing happened on a daily time frame. So we had this grab, we had this grab. So now, since we already had this grab, this indicates to us that this market is going to the upside. So we already have a break of structure again inside this range. We have another break of structure. Now let's and we had a retracement for one entry. Yeah, you can enter in this range. You can enter at this range. You can enter at this range. So we had it. Let's go to 15 minutes time frame. So my initial time frame was 1 hour. So this was how I picked the trade. This was how I picked it. So when I saw it, there was a there was a shift of structure here, and the market came back to come and touch the other block, and that was the beginning of the buy. So when I saw this, I was crystal clear, and I was very sure that this thing we are going up. I remember on our daily time frame, we are looking for something something way high. So we're looking for something way high, or way higher rather. So I saw this move. I saw it. If you notice, we had another break of structure here. Let's break it down. We had another break of structure here. So when we had it, the market came back to touch the fair value gap. Right, came down to touch the fair value gap. So that was the beginning of the entry. That's the beginning of the entry. So I pick it. I pick it around this range. I picked it around this range. I picked it around this range, and the risk was very low. It was not even a serious risk. So from that range, let's assume you missed it here. You can quickly catch it up here. Then you are good to go. So I closed it. I did more than because it was a small account size, so my risk was less and everything. So I even doubled the account. So I hope you are getting me. So now I know that we've learned one thing or the other here, and if you if you need any question, you can ask me. You can ask in the comment section, and I promise to answer everything. Okay, so thank you everyone. Do have a nice rest.